the questions we ask, the core, children, occupation, recreation, emotion, the trust that we're building, it's all for a reason. It's giving us clues. It's giving us ideas of what they want to accomplish. But once you gather all that information, now you can make a decision as an agent. I'm going to use one of two pricing strategies. Random numbers is not a pricing strategy. I'm going to use a benefit pricing strategy, or I'm going to use an affordability pricing strategy. Based upon that unique client situation, it allows me to do which one. Welcome back to another episode of the Life Insurance Academy podcast. Today, I'm in the studio with the studio man himself, Mr. Adam Steffen. Glad to have you in here today. Is this your third?
This is my fourth or fifth.
Fourth or fifth?
I think at this point now.
I love it.
We need to go ahead and put co-host under my name. I think I'm vastly approaching that.
I think you are, and I think you do a great job of it. You have the best radio voice.
I appreciate it.
It's so deep, which your history was working in...
was in broadcasting. I had a radio show for a short time in life.
Yeah, absolutely. We're excited about that. Today, guys, we are bringing you part 2 of our series that we talked about when it's all focused around pricing and bringing value and pricing strategies. But really more important than anything, it's teaching you guys how to close with confidence, how to not practice a script that your upline or somebody has given you, or a script that we have given you, and you're able to move through that confidently. But then it seems that we're ready to present prices, we're ready to close, we're ready to figure out what is that right strategy to use, and lose confidence.
Right. So it feels like we kind of break this all down like as opportunities for us to lose the sale. We talk about the first 30 seconds if we're on the phone. Mm-hmm. We talk about the first couple of minutes if you're face to face.
Yep.
Then once you transition from that kind of opening into the presentation, like there's a number of things, a number of times throughout the presentation that you are really fragile on your ability. This is essentially, to use a football reference since the season's about to kick off, this is we're in the red zone and now we need to get that last 20 yards figured out to get this over the line.
Yeah, I would even argue, Adam, that it may not even just be the red zone. Like we're at the 10-yard line, right? Like we are, like, and it's the fourth quarter,
right?
And we're down 6.
But it's third down. You've got one last shot before you kick the field goal, or it's now or never.
Yeah, and for some of you that are brand new and you're unsure and you're just eager to learn and eager to continue to dive into this, this is also where you as an agent feel the most anxiety, where you feel the most anxiousness, uncertainty. I'm not sure how this is going to go. And for reference of that, following our sales process and doing it over and over again, you should have confidence in the very first portion of our sales principles. When we go to belief and trust, and by the time we're hitting stakes in our sales process, we already know we have the sale. So being able to continue that. But another way to recognize this is where you get I want to think about it, or me and the wife are going to pray about it, or we'll get back to you, or we're going to shop around a little bit. That isn't necessarily the truth, Adam. That is something because they don't know where to go. They don't know how to choose. They don't know if this is the right option. And they don't really have a response. And unfortunately, a lot of agents, they just relinquish control. They'd say, okay, I've done a great job of staying in control the entire time. Now here, you take it. And the clients don't know what to do with it other than go, okay, well, I guess we'll think about this and get back to you.
Exactly. You're not walking them across to the finish.
You get them to the 10-yard line.
Exactly. And then going, okay, your turn, I guess?
Yeah.
Right? So if you haven't had a chance to go and watch last week's episode, I highly recommend you do it. But just kind of a quick overcap. Something we had talked about was kind of understanding the client's perspective, which is kind of what you were talking about right there.
Absolutely. Yep.
Looking beyond the I can't afford it, really identifying what that means kind of the root causes of that and ways to really kind of avoid it before it ever happens.
What are they saying when they're saying those words? They're not saying, I've dived into my budget. I really want this. I have to have this for my family. It is so important to me. I just need help figuring out a way to prioritize my budget to do it. That's not what they're saying.
Exactly.
Right.
It's, I don't know enough to confidently make a decision on this, so I'm going to be polite and give you an out. So that way I'm not just telling you, no, I just don't like the color of that shirt. I don't trust you.
Absolutely.
But then something else that we had talked about, and just to finish up the quick recap, we talked about just humanizing the sales process, making it more than just, hey, I'm here for a transactional thing. I'm going to be here for just a couple of minutes. We'll move on. And then the part that I love watching you do, and I actually had a chance to watch you interact with a former client of yours, or actually a current client, what we kind of discovered of just uncovering the vulnerabilities and like you said, making it a human to human thing, making it just the interaction of, oh, hey, how have you been? Oh, you were doing this. Just to put it to perspective, guys, this is a sale that Zach made 6 years ago.
6 years ago.
6 years ago. And within 90 seconds, you already had his information pulled up. You remembered, oh, yeah, we had talked about this. We got you set up with this company. It was this plan. The man is a machine, an absolute machine.
Asked him about his wife and how his wife was doing, who had a very unique name, not an everyday name. The wife's name was Shime.
Yeah.
And without looking at anything, I was able to remember that. It was pretty cool. I don't know how, but
I would say that it's this. It's going through a system, having a point where you're checking all the boxes of, okay, did we develop core? And in developing core, you're going to dive into that. So you've got it to the point where it's just second nature to you. And that's really the goal of all of this.
Absolutely.
It's just to make client interaction second nature.
If every one of your clients was a part of your family, right, how would you treat them in educating them on insurance and putting them into the best plan and connecting and figuring out what they really need?
Yeah. So where we left it last week was the affordability statement and then kind of the emotional versus the logical sale. So I'm going to pitch it back to you of kind of where we were. And just to kind of put another little plug in here, this is a shortened version. I joke with Zach. Zach's like water. He's uncompressible except in extreme situations. So this is a full 4-week series that we did on our coaching program. It is available on the platform, so be sure to go check out lifeinsuranceacademy.org if you haven't already. We do a full deep dive 4-hour conversation, probably more than 4 hours is what we got into this.
Yeah.
But let's kind of give just the 10,000 foot view of kind of this concept.
And you're the magic man behind the camera, so I don't know if you can put like a little cool clip highlight of last week of that portion, but we went through and guys, I literally use this and I teach this every time in every situation before I open up the pricing strategy, which was my statement of demonstrating empathy and understanding. And we went in and we finished the last podcast in depth talking about what exactly I say and then the psychology of why I say that and what objections does that go ahead and bring up and get out of the way for us before the client is ever able to do that. And that statement is, it's memorized. I've literally used it over 1,000 times. Like, and it works because it does humanize. It does move that understanding. But that is the setup, right? That is me letting them know, hey, I'm a human too. Hey, I really understand your situation. I really understand that, every dollar is important to you and you're on a fixed income. I know you love your family also. I know it's a burden to you and it's hard to think about not being able to do this for your family. I'm gonna come alongside of you and we're gonna do something.
Yeah.
Right. Is essentially what it is. It's positioning ourselves on the same side of the table rather than across the table because that's transactional.
Yeah.
Right. I want to be a part of that family.
Well, and we went into depth about, kind of exposing the vulnerabilities. It doesn't really boil down to so much you can't afford to have it as you can't afford not to have this.
100%.
If it's going to be difficult to come up with $50, $80, $100, whatever number that it ends up washing out to be, if that's going to be hard to come up with a month, how easy is it going to be to come up with 10 grand on that day when someone's just emotionally crushed, they're vulnerable, they don't know what's going to happen. And oh yeah, by the way, there's someone standing there going, okay, it's going to be this much for these services. How are you going to take care of this?
You're exactly right.
That's the last thing we want to put on somebody's plate. So we've demonstrated the empathy and understanding. You've gone through your memorized paragraph, which I have it in front of me. I'm not going to make you read it again, but I was going to laugh because I already know I've watched you do this about a dozen times in the last few years. But so now we've laid the groundwork. What's next? This is the fumble we were talking about that happened. So what's next steps for agents once we get to this stage?
Well, I'll start off by saying what not to do.
Fair.
Right? Don't just randomly just picking numbers or benefits or, selling cookie cutter policies to your client and telling them to write them down, right? Because it is emotion backed by logic. All that emotion through the sales script. When we talk about belief, we talk about trust, right? We talk about how trust is formed. We move through the stakes. What happens with this? What happens without this? How does that make you feel? We ask all those questions. We build that emotion, right? This is where that emotion turns to logic. We have that heart. That heart is in the sit with us. Now, how do we make that make sense? It has to make sense. So this is that logic part behind that emotion. And what I mean by that, Adam, is, and I hear this all the time when we do boot camps or training agents or riding in the car with agents, when an agent will say, okay, Miss Jones, I want you to go ahead and write down a couple prices for me, get a pen and piece of paper out, which is all good things. And then they go, first number I want you to write down is 20,000. Second number is I want you to write down 22,000, and then I want you to write down, 25,000. And it could be any numbers.
Yeah.
My point is, how did we get to there? Why those numbers? Because this is the questions that the client is thinking.
Yeah.
Like, why is 22 or 15 or 10? Like, whatever number you come up with, how do they know that that's going to be the perfect fit for them? First of all, to cover their need, right? How is that going to be applied to the burden? We're not necessarily worried initially because we have to bring them together. There's two main problems here, Adam. Number one is it going to solve my problem? Is it going to feel that vulnerability that I have? Is it going to allow me to make a difference in my family's life that's going to remove this emotional burden that is sitting on my chest right now?
Yeah.
And B, can I afford it? Like, those two have to come together.
Yeah.
So I see agents all the time literally just dart out random numbers, and I ask them, follow them up, like, oh, how did we come to that number? What logic did you use to say this is what they need? And a lot of times they don't have answers for that.
Are you ready to launch your insurance career? Excel Solutions is your go-to leader in life, accident, and health insurance pre-license training. Their cutting-edge e-learning platform is packed with rich content. Think interactive assessments, engaging videos, and customized learning paths, all tailored to your learning style. Being students ourselves, we've trusted Excel now for years to deliver top-notch training, offering high pass rates. Their streamlined prep review courses and the exam simulator are really your secret weapons to nailing the state exam the very first time. Now, you thought it couldn't get any better. Well, it just did. Life Insurance Academy listeners, you receive an epic 50% discount, reducing the regular course fee from $199 to only $99. So, all you have to do is use partner code LIA at liapodcast.org/Excel. Now, Excel spells XCEL. So don't think about it any longer. Dive headfirst into your insurance career with Excel Solutions' premier pre-license training with that exclusive 50% discount just for you. Get the code, get licensed, and excel in your insurance career.
So then how do we get those answers? As a new agent, we get to this point, we know we need to put options in front of them. How do we decide what options to put and how to go about putting those options in front of our prospective clients?
And this answer here is simple but difficult.
Yeah.
Okay. And the reason is the better you get, the more experience you get, the more self-aware that you are, and the more you can truly get in your client's shoes and understand their life situation, you start to take your knowledge of insurance and you take their life situation and say, if I was them, this is what I would need, right? And so that's where it sounds simple, but all the questions we talked about on the previous podcast, right? The questions we ask, the core, children, occupation, recreation, emotion, the trust that we're building, it's all for a reason. It's giving us clues. It's giving us ideas of what they want to accomplish. It's all of their wishes anyways, right? But once you gather all that information, now you can make a decision as an agent. I'm going to use one of two pricing strategies. Random numbers is not a pricing strategy.
Right.
I'm going to use a benefit pricing strategy, or I'm going to use an affordability pricing strategy. Based upon that unique client situation, it allows me to do which one.
So how do you determine which of these strategies to go about? Because you don't, obviously we can't just, like you said, we don't want to do a cookie cutter kind of thing where, I need to start from the benefit side of it and then look at the affordability or the like there needs to be a way to delineate between the two, right?
Perfect. So the benefit pricing strategy is the easiest pricing strategy you can do. It's simple, right? It's the benefit amount that we're going to present to take care of the client's problem it's going to be based upon the coverage amount and needs. Very simple. Do they want to be buried? Do they want to be cremated? Or let's say maybe they want a mortgage protection plan. So the amount that I'm going to propose for this client to take care of their problem is going to be based upon, Mr. Adam, you wanted to be cremated, right?
Right.
Also, I'm taking your age into an account because if you're 50, you have typically a lot longer to live than if you're 74. Right. So we got to consider some of those inflation factors. We also got to consider like maybe what their wishes are. Maybe they want to be cremated, but maybe traditionally they love to rent a casket, have a showing, have the family come see, and then cremated following. Maybe it's a 2-day thing, maybe it's a 1-day thing, and you don't have to get all into that either. But these are just like little questions that's cluing. Is it going to be a basic cremation, or is it going to be a mid-level cremation, or like an over-top cremation?
You want to bracket basically your pricing. If my wish is just to have a simple cremation, a very simple ceremony, very minimal things, just kind of a stuff, and you start quoting prices of benefits that are going to be more for a full funeral, large event, that $10,000, $12,000, $15,000 kind of option.
Exactly.
Where I'm looking for something more in that $5,000 to $8,000. It gives you an idea of how to bracket where that benefits is, and then I'm guessing that's going to how you lay your options out from there.
100% of the time. So the reason I tell you that a benefit pricing strategy can be used in any and every situation. Can be. I'm not saying it's always the best to be.
Okay.
It can be, right? So typically, when you're a brand new agent, even me when I started, this was the type pricing strategy that I use. Almost every time. If you're brand new, this is probably what you're using right now. They said they wanted burial, they wanted cremation, whatever. Like if like almost every one of your policies is like $10,000, or the first number you write for everybody you talk to is $10,000. Maybe it's 8, 10, and 12, or maybe it's 10, 15, 20. My point to that is to really know that you're going from good agent to a great agent. Is you can kind of look at those numbers. Is everybody I present have the same numbers? Probably shouldn't be, because every family is unique.
Yeah.
Every family is different, right? Their budgets are different. So you can use it anytime, which makes it very flexible and doable. When I would use it is because I probably use that pricing strategy 10 to 15% of the time.
Really? That low?
That low.
Okay.
And the times that I would use it is when a client has a lot more money than they do need.
Which is not really the typical final expense client.
Client. And to give you an example, if I'm sitting with a client and, they filled out a request, or maybe I called them on the phone and they filled out, a digital lead for final expenses. And let's say, they're retired, maybe they have a pension, maybe their house is paid off, they have a couple of investments. We would agree this is not a typical final expense client, right?
Yeah.
It's, if I happen, my family's going to be devastated. No. So I can't really, their vulnerability and their pain points is different.
Yeah.
In that situation, Adam, their pain points are convenience, removing an emotional burden more so than a financial burden. And it's also protecting investments and other assets.
Mm-hmm.
So I'm going to be presenting a basic benefit strategy to, again, and this goes back to peeling back the layers of need and the podcast we did on those, and identifying how do we build need and build value in a system. But this is going to be very basic. It's not going to make sense to them to say, hey, can you afford $1,000 a month to put into a plan? Or, because they have plenty of money, we know that. But why would they do that on a final expense plan?
Yeah.
It doesn't make sense. So I would present a basic burial or a basic cremation just to be enough to take care of the need, so that the surviving spouse doesn't have to take money out of the house or their equity or their other investments that are probably growing. They don't have to interrupt any of that. It's typically the male would pass first.
Right.
And typically, I'm not saying always, typically they usually have a handle on the finance side of that.
Yep.
But it could be vice versa, right? Typically, a big concern for whoever that person is in the family would be the other one typically doesn't do as much or have the relationships with the advisors and all that stuff. So it keeps it easy and clean. They can take the policy, take it to the funeral home, or they can even sign it over the funeral home. And that is completely done, hands washed. If I pass away, I know my wife doesn't have to do a thing. All she has to do is basically go to the funeral home and it's done. Like that's it. So that's the benefit that we're looking for. So somebody in that situation, they can't justify paying $200 or $300 a month to they only want to be cremated, let's say, and all of a sudden I'm proposing them a $40,000 whole life policy.
Yeah.
It just doesn't make sense.
Yeah.
The only other time that I would use that is if a client has no money at all.
Really? Okay. So literally the total polar opposite.
Total polar opposite. So
how does that work out?
Usually pretty good. Right?
Fair. But so how does that work?
But think about this. Regardless if you have money or not, do you have need for insurance?
Yes.
Absolutely. You still will pass away, and it would still cause some sort of emotional and financial burden on your family, right? So if you're not paying for it, they're paying for it. If you don't have any money, and this happens in situations I've had a lot, but the client trusts you, they know they need this, they really want this, and they want to get it today, they just can't, they just don't have any money or to do that. So the truth is that an excuse or is that true? If it's true, they're emotional about it because you have trust, need, want, urgency, right? We just don't have money. It's the only one we don't have. So typically your client is going to be more emotional. They're going to be more in tune of trying to figure this out. But also, your client is receiving financial help from somebody.
True.
Almost every single time, it's a son or a daughter that's helping cover some additional bills, that's sending some money in. Right?
I think I see where you're going with this. So if you've already got someone that's assisting with the day-to-day already, we know that this burden is realistically going to fall onto this individual statistically. So then now we approach it from this benefit of, okay, we know we're going to need at least $5,000 to cover a basic cremation. You told me that your daughter kind of takes care of all your finances for you, kind of helps you with the bills and stuff like that. So is this maybe a conversation we can loop her in, or am I way off target here?
That's exactly right. And here's the truth. They're like right now, let's say their daughter's helping pay for some of the house expenses. If the mother is needing an extra $150 a month Is the daughter giving her an extra $600?
Yeah.
Probably not. She's paying enough to cover the bills.
Yeah.
But also, typically, the client that we're sitting with is at a different stage in life where this is really triggering them into making sure, oh my gosh, like I would be a burden on them. How would they be able to do this? Like they're already helping me out. But the truth is, if they don't, like it's a lot easier for the daughter to the son to help pay for an extra 40 or 50 bucks a month to put a basic plan in place. That's actually going to benefit them because every policy we sell is not for the client we sell it to.
It's very true.
It's for the beneficiary, which that's the person. That is the person. So it makes a lot of sense. Again, there's the emotion and then the logical part. It makes a lot of sense for them to help because if not, they're going to be one dishing out the bill. They're going to be one scrambling to figure things out. They're going to be the one that wished they had something in place. And so it's a lot easier. Back to the other pricing strategy of affordability pricing strategy, when I present this scenario to the son or the daughter or whoever's helping, it's not going to make sense to me to say, okay, so your mom wants to be cremated. She doesn't have enough to pay for it. Obviously, I don't say it just like
right. Yeah, much smoother delivery, more delicate.
Right, like I'm going through the whole process. Literally, yeah. I'm building the whole process with them. I'm not going to turn around and say, okay, how much can you afford on a monthly basis? Well, you know, I guess I could afford to give her another $100, and then I turn around and price quote it. Oh, looks like we can get her $21,000 of coverage. Okay, let's do that. Well, why? She only needs to be cremated.
Yeah. And that goes back to kind of the affordability statement that you brought up. You need to be able to afford this on weekends, birthdays,
exactly.
holidays.
So they're already helping out. They want to help out the smallest amount they can because they still have a life to live.
Yeah.
And that's the importance. So again, recap that. Benefit pricing strategy, I can use it anytime. Brand new agents use this every time. You can use it when a client has a lot more money than they do need. And you can also use it when somebody has no money at all. Because it doesn't mean they don't have need, right? They typically have more need than anybody else.
Yeah.
So that's kind of the benefit.
Okay. So then now switching to the affordability. If you're using benefits pricing anywhere from 10 to 15%, this is going to be 85 to 90% of how you present pricing.
And this one's so fun, Adam.
Yeah.
This is so fun. This is that puzzle piece, right? Except we don't know what it looks like. We don't know the edges or the curves. So we get to ask questions. We get to paint the picture. We get to figure out because clients come to us with a surface level or an apparent need. I don't have insurance. If I pass, it's going to leave a burden. That's it. They typically don't even have the full deep understanding to know that, wow, it's going to hurt my son Adam.
Yeah.
Or it's going to, like, how are they going to do this? Where are they going to get the money? Are they going to have to do a fundraiser? Are they going to have to pass the hat around? Are they going to have to take a loan out to cover this? How would that make them feel? How would that affect their kids and their grandkids? They haven't even been able to think about any of that. They're just, I don't have anything. I don't know what they would do. That's it.
Yeah.
So if that's all they think about and they know they have a vulnerability, it's impossible for them to think about, okay, what about funeral cost? What about the future cost of a funeral with inflation? Because I probably won't die today.
Yeah.
What about any medical bills that if I pass away that, typically we don't pass away healthy. So there may be extra funds there. What about any other loss of income? If I'm married and have a spouse and my Social Security gets cut by 60% because one of us loses the Social Security, how can they pay for my funeral? And also, how can they also pay the normal bills? Because 9 times out of 10, your clients are living paycheck to paycheck using both paychecks. So we have loss of income, right? Then we have, miscellaneous debts or miscellaneous car payments. The water pump goes out. Like we need some sort of slush fund. And that goes back to the layers of need.
Yeah.
We build value by asking questions on those layers of needs. So typically, when you can use and the right time to use an affordability pricing strategy is when a client has a lot more need
than they do money.
So the idea there is we're gonna focus on the budget and we're gonna buy as much coverage to take care of as many of those layers in need that we can while staying comfortable and affordable so that we can maintain it forever.
This is the fruit end of your statement. It's better to have some thousand than no thousand.
Yep.
If we know that our cremation that we're wanting is going to be between that $5,000 to $8,000, depending on, how far out that cremation is going to take place, it might be difficult for us to come up with money to even cover that base level of $5,000, what it would cost today.
Exactly.
But if we can come up with $1,200, $3,000, something to kind of help alleviate some of that pain.
Right. Or let's say, the client absolutely, just to get them through the next 3 or 4 years, they need probably $40,000, $50,000.
Mm-hmm.
But if we can't get 40 or 50, like, it's okay if we get 17.
Yeah.
And that goes back to the cookie cutter stuff. Like, they understand, because it's emotion backed by logic. It makes sense of why it's 17, because maybe that 17 is going to cover all that funeral cost if they die today. It's going to cover all the funeral cost if they die in the next 10 to 15 years based upon their age. And it's also going to leave $4,000 or $5,000 left over to take care of any debts or medical bills at the time of passing. And it would give them a little bit of money left over. That little bit of money left over is not going to be enough to cover the loss of income of the household or to continue to maintain things, but it buys them time to figure out their next move. But if an agent's just coming in saying, Miss Jones, write down 10,000, they think they've done a major service, which they have, right? And getting them a plan for this, but they haven't thought about anything else.
Yeah.
So in order for the client, it's not for us to know that they need more, right, than they can afford. It's for them to know. And the only way they can know is us to ask really good questions and help paint that picture for them. We can't tell them what they need. They can't tell them what's going to happen. We have to ask questions for it to be revealed to them that, wow, this is also a vulnerability. I didn't think about that. I don't know how we're going to afford this. Like, we have to do that delicately without blowing them out the water.
Yeah.
Right.
The line that I've heard 1,000 times on this is telling is not selling, right?
100%.
If I tell you the issues that you're going to have, you'll sit there and nod. But when you have that epiphany of, oh, this is something my wife is going to have to take care of. This is something that my sons are going to have to take care of.
You're absolutely right.
So now we've gotten the benefit, or we've got the pricing strategy that we know we need to present to the client based on what we discovered under their need, based on what we learned through core, based on all of those good questions we've asked, all that great conversation we've had leading up to this. Now we're on the 1 yard line, Zach. How do we actually present the price to start really moving through this close?
I've heard so many ways for people to present prices, and there's so many successful ways. I just want to point out some things that could cause objections and that could cause issues, because there's a lot of ways to do it and there's a lot of ways to not do it. So I'm not saying the way I present it works. Well, I am saying the way I present it works, because I found all the ways that it hasn't worked in the past.
Right.
So one common mistake that people make is they'll ask them to write down numbers, right? And again, if this is emotion backed by logic, emotion, we think of who do we love? Who are we trying to protect? What is it going to cover? Because the biggest underlying issue in any life insurance sale is not, can I afford $50 or not? It's not a transactional decision. And so many agents make it about price and they make it about transactional decisions. And that's where they fall short, because now they're making a decision on, do I want to and can I afford to pay for this price or this policy, instead of how important are my kids? Like, you have 2 kids, Adam.
Yeah.
And I know, we all have our family household budgets, but if your wife Marie called you right now and there was some emergency with one of your kids, how much money would you spend to make that right? Would you consider a loan? Would you go into debt at any amount? Like, what would you do for those boys?
Anything.
Everything. Right?
Yeah.
And that's the point, right? Instead of making a decision on, okay, this is my money, this is what I can afford, like, I'm only going to do what this little bit. Like, when it comes to somebody else, when it comes to that love, when it comes to that emotional and financial burden on them for people that you love, you'll do anything in the world.
Right. So you need that emotional anchor when you're stepping into this.
You have to continue to focus. So the first thing I do in any pricing strategy, I ask Miss Jones, okay, I want to get a piece of pen and paper. I want you to write down a couple things for me, okay? The first thing I want you to write down is I want you to go ahead and write down Sarah's name at the top of that paper. Mm-hmm. And for you guys, Sarah would just an example of a beneficiary.
Right.
I'm constantly reminding them who it's for, who do we care about, who do we love, who this is going to impact the most. This isn't for you, right? This is the person. So I'm constantly reminding. I want you to write Sarah's down on the paper because this is all about her, and it's about protecting her and making sure she's okay.
As Roger would say, the stakes have a name.
The stakes have the name. This is it. I'm putting the name even when they're writing down prices, and you'll hear this over and over again. The next thing I'm going to write is typically I have a really good idea, like a very good idea of who we're going to be applying for. Mm-hmm. So I'm going to write down, I'm going to ask them to write down the company's name. Okay. Whoever that company would be, Life Insurance of America. Mm-hmm. Yeah, that's not a real company, but
right.
And then I would proceed because I have their attention. I'm spoon feeding them, Adam, because I have control, right?
Yeah.
I tell them to write down Sarah. They write down Sarah, and I tell them why that's important. Again, even though we've talked about it the entire presentation.
Right.
Right. Now she's writing down the company name, and for the purpose of now, I'm going to build value on the company. I'm going to tell them how good it is, how long they've been around, their AM Best rating, maybe a story or two of, hey, I have this same company on my family or my grandma, or I've had,
tell them how many clients that you've protected their family through this company.
Make
them feel good.
Instill confidence in them and in the company. We're bridging that gap there.
Yeah.
And then after that, I'm going to ask them to write down 3 numbers, right? Because 1, they don't have enough options to make a decision. They'll have to think about it. If you write down 4 or more, there's too many options. They can't make a decision on it. So we're going to write down 3 options. And let's just say it's 10,000, 12,000, 500, and 15,000. Okay. I'm not asking them to write down 10,000 and then I'm going to give them a price. I'm not. I'm giving them all the face amounts first. 10,000. Okay. And below that, Mr. Adam, I want you to write down 12,500. And right below that, Mr. Adam, I want you to go ahead and write 15,000 for me. Okay.
Okay.
Now, next to that 10,000, Mr. Adam, I want you to just draw a small little arrow pointing to the right. Now, this $10,000 benefit, Adam, this is going to make sure that if anything happened to you today, that your cremation would be fully taken care of, or your funeral would be fully taken care of, okay? And that money would pay directly to Sarah to make sure that she wouldn't have any financial burden left on her, and she would be able to take care of this, all right? Now, this plan here is only, $56 a month.
And then I like the way that you presented this, and I want to point this out in case somebody missed this subtlety. Is only this much.
Is only every time. But other thing I want you to point out, again, I had you write down all the different coverage amounts on the left side on top of each other, all 3. That lets them know we don't have to make a decision yet. There's more options coming.
Yeah.
But what I'm not doing, and this is a huge, I call it a red flag that can make your close more difficult. I'm not saying you can't close this way, but if I write down all 3, if I write down 10,000 and then give them a price, and I write down 12,500 and then give them a price, and then 15,000 and then 82, and then I'm going to go back and explain why that's going to be a good point. The only thing they're thinking about the entire time, can I afford this or not? Which one of these can I even buy any insurance?
Yeah.
That's what's going through their mind.
They heard that first price of 50, whatever that price is. And as you're speaking on the next part, they're in their mind going, okay, at $56, do I really have $56? They're not listening to anything else that you're saying.
Correct.
And they're already talking themselves out of anything.
Correct.
Before you've really even provided the value of what this is going to be taken care of.
Absolutely.
It's just numbers next to numbers. It's not numbers anchored to that emotion.
We're not anchored to the cause, who it's for, how it's going to benefit them, and the love. Like, it's not anchored to anything. Not only that, I always start with the low number and then build the higher numbers.
Okay,
Because
why?
if you start the other way and that top number is, let's say, 20 grand, and that blows them out the water, they're shut down.
Yeah.
They're shut down. They're discouraged. They can't do it. They've already ended. You may talk for another 3 or 4 minutes, but they've already made the decision they can't do this.
Yeah.
Or you're showing them something high and mighty and exciting, and then you're saying, it's like going to the ring store to buy a ring, right?
Yeah.
Hey, check out this. Marie would love this ring, Adam. And they put like a 3-carat ring in there, and you're like, wow. And they're like, oh, but what's your budget here? Let me put this one in there. And
Yeah.
you're like, it's pretty, right? How does that make you feel as a man right there?
Exactly. It makes me feel like I can't provide the things that I'm supposed to be able to provide.
That's exactly how they feel about
Right.
this insurance policy. So I build it up, right? But everyone, again, I spoon feed it to them. So I'm going to tell them how the $10,000, what it's meant to do, and it's based upon your feelings. You wanted to be buried. You know, you told me, because again, in the presentation, we talk about, you know, how much do you think it would cost around here? Have you had lost anybody close to you? How much was it for them? Do you think your funeral would be somewhat similar to theirs? You know, like, I'm gathering all this idea. So this is a number that you gave me. And so I know you want to be buried, and this is a price that I know you think it's going to be. And then I add, so it's 10,000, and I add who it's for, Sarah, again. And then after I explain all that, it's only $56. Okay?
And then as you go through the next, I'm assuming then you
Yep. Now,
expand on that.
Exactly. And I'm not waiting for them to go, I can or can't do this. I'm not asking for a close. I'm strategically moving on my timing to go to the next one. I say, Mr. Adam, see that $12,000, $500 benefit you wrote right below that $10,000? Now, this would make sure, that you're fully covered if you passed away today, but with that extra few $1,000s, it will give Sarah an extra little bit of money for a couple things. Number one, if you died today, she would have a little bit of extra money to cover any debts or medical bills that may have come along with you passing, or any other fees that we're not expecting, or she might have a little bit of extra money to remember you by. Okay,
Yeah.
It's not much there, Mr. Adam, but it's a little something. But I don't plan on you dying today, Mr. Adam. So if you do a little bit longer, it's probably going to take all $12,500 for your funeral, and there wouldn't really be as much left over for her, but that's what we're protecting. And that one is only $68 a month. Now, this last one down here, Mr. Adam, that $15,000 that you have at the bottom there. Now, this is going to ensure us that if you pass today, it's going to leave her enough money to make sure your funeral's taken care of, enough money that there should be any medical bills that comes in, but it would also guarantee that she has a little bit of extra money left over, for you to tell her, I love you one more time, and she can use that for her family. That if you live the full mortality of a man, which, depending on your age as the client, kind of doing the math, most likely it would take almost all of that money, okay? But we still know that your funeral's protected no matter if you die today or you die at your full mortality, right? And Sarah will be able to be taken care of. And, again, I'm going back to Sarah on every single price. You follow me?
You keep tying it back to the emotion.
That one's only 82. Now, keep in mind, I will give them, like when I give them these prices, it's only. So I'm building so much value and emphasis, again, on in the logic side of that. They know exactly what it's for, and they know exactly who it's for and how they're planning to use it. And then it's only this much. So I'm agreeing with them that you're getting way more than you're ever paying for this plan because we've built value. In the absence of value, everything is too expensive. Every single time.
That's
so
very
if you
true.
just give numbers, they're all going to be too expensive.
Because it's not tied back to that value. It's not tied. You said emotion backed by logic, not the other way around.
Yep.
There's a reason that we phrase it that way. Okay, so now in the affordability pricing strategy, do you go through the same
Exactly. I present the pricing exactly the same. So two things that consistent in every single sale I've ever had, the demonstrating empathy and understanding that, Mr. Adam, the most important thing to me is that we find something affordable for you. We have to make sure we afford it on the holidays, birthdays, and weekends. That whole spiel that's in the last podcast, every single time I say that, then I pick a pricing strategy, which we didn't get into today on, we got into why you would use one versus the other, but we didn't get to how to do it.
Yeah.
Right. That's in our coaching series and that's in our courses that we can definitely help any of you guys with. But once we do our pricing strategy, either strategy we use, it gives us those three numbers. Follow me? It's either going to give us the three numbers on the left side, or it's going to give us the three numbers that we're going to start with on the right side. It's going to give us the benefits we're going to start with, and then we're adding the price, or it's going to give us the price we know we need to land in, and we're going to add the benefit.
Okay, so then you're basically starting in a range. So I think and forgive me if I butcher this. So Mr. Zach, just looking at what we need, would say $80 to $100 be affordable for you?
Yeah. So if that's where we want to land, we don't start there. But that's a different trend.
Fair. Again, remember, guys, I am not an insurance salesperson. I am a failed insurance salesperson. I didn't have this kind of training and this kind of back and forth beforehand. So
don't say that, Adam. You would be one of the best out there because you're the most trained because of you're behind the camera on every single thing we do.
It's very true. It's
I am
silly.
Extremely confident in you, Adam. Extremely. But yes, so we're literally, regardless of what pricing strategy we use, the way we present it and explain it is the same every single time. And the only thing we do then is I follow up with that question. I give them a slight hesitation, and I don't want them to say anything. Like I want to, how do I explain this? I want to exaggerate that pause for as long as I can before they talk. Okay. So if I can go 5 or 6 seconds of silence while they're looking at that, while they're reviewing that, and then I'll come in and say, now, Mr. Adam, which one of those is going to be the most comfortable that we can put in a plan to make sure Sarah is protected?
And then we just
I didn't
wait.
say, do you want to buy insurance or not?
Yeah.
And then I wait.
Okay.
But let's say, most of the time they'll pick one because I've done everything else and I'm not shooting random numbers that are going to be off the wall.
Yeah. It's everything is built up to this point. So this is why Roger always refers to this, the no close presentation, right? Because we've already dealt with all the objections. We already covered all the value that it's bringing. We've already, invested in the emotional benefit that it's going to give. It just in this, that, and the other. So now we're assuming the sale, correct? We're going ahead and moving through. They've told you, okay, you know what, that $12,500, I think I can make that, we can make that work. I think that's what we want to go with today.
Yeah, and I know we're way over time here, but
Right.
I think this has been very valuable. But Adam, I will say there's a specific strategy, which is the 1 yard line right at this moment. And I don't know if we have time to cover it today, but if people reach out, if you go into the comments, if you communicate with us, I would love to share that with you. If you come to our coaching program, I would love to walk you through that. But what if they don't answer right away? What do we do? What do I say? Yes, we have another line, we have another thing, but what if they don't answer the second time? What if they still don't choose a plan the second time? Then there's a completely different strategy that closes it every single time. Every single time.
And that really kind of lays it out. But again, this is the 10,000-foot overview of this training that we have done. So I know you've heard us say this before. Go to lifeinsuranceacademy.org if you haven't. If you've just found us through Spotify, just through the podcast, through YouTube, wherever, go check out the website. It's just got a facelift. It's got whole new features.
Yeah.
We've got a completely new overlook. But in that, we dive deep into all of this. We get to ask and answer questions that you have regarding on this, into the specifics on this. And like you said, we're kind of out of time today and not really able to dive in. So I hope that we provided value. I hope that we've answered some questions or turned on some light bulbs to make you a little bit more confident into stepping into this aspect of the sales process.
And Adam, I want to ask something else. Like, with you guys out there, there's nothing more than we get enjoyment and love from is making a difference. And we want to have that relationship with you. We want to hear those wins. We want to celebrate. If you were doing a different pricing strategy, or if you are presenting prices slightly different, and maybe you just gave this a shot and it worked, let us know. We want to hear that. We want to hear that this little red zone technique can literally help you close double the amount of policies. And we want to celebrate those wins. Hey, send us a screenshot, send us a picture of you, send us a little testimonial how it worked. We would love to take that and share that on our social media that you guys are winning. And that's just so cool to us. That's the reason we do this anyways.
The whole point of this is just to make everybody in the industry better, regardless of who you're with.
Everybody.
Exactly.
Bring value to everybody. Yep.
Exactly. Well, wrap us up, sir.
I'll let you do that this time.
All right. Well, as I might be repeating myself at this point, I hope that we brought value. Please leave those comments down there. Let us know how this is working. Let us know a topic that you would like to hear us cover.
Yep.
Heck, go against us. Say, I think this is silly. This is not how we do this. Bring something to our sphere of relevance that we might not know on how. Like we said, it's to improve everyone, and that includes ourselves. Thank you so much for taking the time to listen to the podcast, and we will see you next time on the Life Insurance Academy podcast.